back here at Future Proof Miami on South Beach with my man Tim Holland, the CIO of Orion. Pretty good backdrop for a nice interview, I would say.
Not too shabby, Dan. Nice to be with you. Nice to see you.
Well, I said you're my first interview and also my favorite, but you're going to stay number one the whole time.
You're very kind. I really appreciate that.
Let's talk about Orion and what you guys are up to right now.
Okay. So Orion's in two primary businesses, technology for advisors and investment solutions for advisors. I'm on the investment side. So our investment platform touches about $100 billion all in. We're seeing great interest in the alternative space, and we're starting to see more interest in ex-US strategies, given what's happened in the last 4 weeks in the markets. And through this period of volatility, I'm fortunate to work with a fantastic first-rate investment team and marketing group. And we're just trying to stay really close to our clients because folks are a little spooked. The volatility of the last month or so has caught people off guard. And so we're just trying to arm our clients, the advisor, with content that they can share with their clients to help keep their clients probably where they should be, which is in their seat, taking a long-term view of things and sticking with their long-term financial plan. So it's been an interesting 4 or 5 weeks, but I think that's one of the fascinating things about this business. There's always something to focus on, and there's always something different.
Yeah, and I think you bring up a great point. I mean, speaking of the last 4 weeks, the volatility, this tariff situation is, as you mentioned, spooking a lot of people. What do you think the key is right now? And obviously you're doing a great job with your clients as well, but what do you think the key is right now for people to kind of not overreact, but also understand where we're at as far as the temperature of everything?
Yeah, I think ultimately the first thing to do is to step back as an individual and think about your own portfolio, your own relationship with the advisor, and what you need that money to do for you and when, right? And if you've got a very long time horizon, that obviously creates a sense of freedom and space that maybe you don't have if this is money you need in 30 days or 60 days or 90 days. So ultimately, it's a very individual decision and construct, and we're big believers in the value that advisors create in their clients' lives, especially during periods like this. So that's the first thing I would say. In terms of where we go from here, truth be told, no one really knows, right? There are a couple people that are driving this conversation from a policy perspective. We're working off the assumption that deals will get done in terms of Canada and Mexico and the European Union. This is probably more about a very different posture between the U.S. and China that's really been in place since Barack Obama's second term, just given the geopolitical dynamic between our country and that country. So we think we will get through this. In the meantime, the volatility is not fun. It's not that unusual if you think about what the market tends to do in any given year, selling off 13, 14%. We were off about 10% peak to trough on the S&P. And the underlying economic fundamentals still look okay. So we think we're okay. And we would advise folks to take a long-term view of things, stay close to the advisor, and we would advise our clients, the advisor, to stay close to their clients.
Something else I think is fascinating, Tim, when you look at where we're at with millennials, they're doing a lot of studies right now that are saying that when millennials, I know it's the great inheritance is coming up, that when they inherit a lot of wealth, they're switching advisors. That's something I know you guys are on top of as well. Yeah,
so everything we do at Orion is with and for the advisor. And one of the ways we stay close to the advisor is by doing an advisor survey, tremendous amount of market research. Again, we have a first-rate marketing department. And that's something we've seen in our survey work that, if someone was to inherit a significant amount of money, that could be a reason for changing advisors. And that probably comes back to the idea that, well, maybe they don't know that their advisor can handle such a significant amount of money, or maybe it's just an opportunity to think about working with someone else. So we stay as close to our advisors as possible. We have an advisor council, we have an elite advisor group, and we've done discussions and workshops on trying to connect with the next generation. And some of the things I've heard from advisors who've done a really good job building relationships with the next generation of clients, even if they're not a client yet, is, and someone once said, you don't want the next generation to hear from you when their parents pass away. That's the last thing you want, because you probably already lost a relationship. So you need to be intentional. You need to purposefully include them in the financial planning process. You need to reach out to the current clients, ask them to bring them under the tent, offer to educate them on markets and the economy. Start building those relationships early, because again, the last thing you want to do is make that phone call when your existing relationship is sort of winding down, because if you wait till that long, you probably already lost them, and then it's too late.
Yeah, it's like that thing where if you're thirsty, you're already dehydrated. You got to drink.
Yep, absolutely.
Before I let you go, and it's so great to be with you, Tim.
Thank you, Dan.
I know you said if we had a crystal ball, we all wish we had a crystal ball.
Yeah.
But obviously, market uncertainty, volatility politically, we have all these things going on. But there definitely are things that can cut through the noise. if you could spin things, I mean, if you had that crystal ball and you spin things forward 5-10 years, do you still feel like we're in a good place?
I think so. If you go back to 08 and 09, that was so unpleasant because of the housing bubble. If you go back 25 years ago and the recession of the early 2000s, that was so unpleasant because of the tech media telecom bubble, the late 90s, and the awful events of 9/11. Usually mild downturns become much more pernicious and difficult when there's something structurally wrong with the economy. It's really hard to see that if you look under the hood of the U.S. economy. The banking system's well capitalized, the private sector's well capitalized, consumer net worth is off its highs because of the pullback in markets, but the consumer, broadly speaking, is in pretty good shape. So we don't see the excesses that would lead sort of a difficult period to become something much more unpleasant. And if you think about the U.S. economy and its structural advantages, its energy profile, the quality of its universities, how innovative its economy is, we still have all of that going for us. I do think something that could be a bit different coming out of this period, not to get into politics, like or dislike the outcome of the election, is that I think Europe and some of the things they're talking about doing in terms of spending on defense, spending on infrastructure, those markets have been terribly depressed for a very long time. They've offered great value, but not great returns. We think as an investment team that we're sort of past this inflection point where the fundamental changes that are coming out of that part of the world make those markets a lot more attractive. And so it's a difficult period. You could argue there are different ways to go about having these conversations in terms of trade and geopolitical risk, but if there's something good that's maybe coming out of this difficult stretch, I think it's going to be innovation and growth in a part of the world that hasn't seen much innovation and growth in a long time.
Brilliantly said, Tim Holland, the CIO of Orion. It was such a pleasure talking with you.
Thank you very much. Really appreciate it.
Hey, the honor and pleasure all mine.